Quick disclaimer, this video is for educational and entertainment purposes only. I'm not a financial advisor, and nothing here should be considered financial advice. Always do your own research and understand the risks before investing.
Welcome back everyone to another Bitcoin update. So what a interesting day, past few hours it really has been in the market. It's been pretty crazy with the whole Iran war. It just seems like it's just playing more and more every single day. So we'll see how that escalates. We'll kind of get into pretty much the analysis part, then we'll go over the liquidity and all that stuff. So quickly getting started on the shorter time frame, it still remains the exact same scenario that we have literally been talking about for the past couple of days. So a first wave down, second wave up, third wave down, fourth wave up, and then a fifth wave down. Now whether all of this is the third wave and this was the fourth wave, and now we're getting one more low for a fifth wave for a possible B wave or a third wave. This could technically be all of the first wave, second wave, and this could be all of the third wave, and now we could get the fourth wave bounce and then one more low. It is, either one can really play out, whether the third wave already bottomed here or whether the third wave bottoms here, or maybe we even go for a extended third wave, or whether the fourth wave has topped here, or whether we're just going for a extended fourth wave. Now technically this could be all of a fifth wave with technically all of the third wave, with this being the fifth, and then we could get that larger. So if all this is an 1, 2, 3, 4, and then 5 wave move up, that could technically be our fifth wave. And then we could now get the fourth wave corrective bounce, in which we could get one more low for that fifth wave. Now, I would say if we were to break above this swing high, maybe something more bullish is playing out. But just from what I'm kind of looking at, and I watched a few other videos too, just wanted to get a better analysis and other opinions on it. And this technically could just be a 1-2, 1-2 set up to the downside. So even though this was all of a ABC three-wave move, and now we got in one more low, we obviously could form another corrective pattern, or a 1-2 setup to the downside and then get another low. That's totally possible. But with liquidity, which we will see later in the video, and I have been posting a bit about it on Twitter or X, whatever you want to call it, where it wouldn't be too unreasonable to say we could indeed have another three-wave move for another 1-2 sub to the downside, where we could also get a extension. And then that would also add a little bit more weight to this blue scenario, where this is a third, fourth, and a fifth wave to the downside. Now, as long as our point of basically our indication that this obviously wouldn't be the case would be a break above this swing high at 72,000. So we technically could go all the way up to 70, 71,000, and then as long as we don't break above that swing high, that remains valid for a 1-2 setup to the downside, where we can get another low. And it makes perfect sense with liquidity as well, so that wouldn't be super surprising to see. Now, what we want to see, whether we get that extended bounce or whether we just head straight lower to the zone. I added the zone with lines. This is basically our support zone that we've been talking about, between 60,000 to that 63.5, 64,000 range. Once we get to the zone, what we want to look for is, how do we react to it? How is price going to react? Are we going to get a choppy ABC three-wave move and we get a sharp sell-off, or will it be a 5-wave move and a 3-wave move down? Now, if it's a 5-wave move and a 3-wave move down, well, it just adds more weight that this was all just, of course, a B wave, and we could be in the beginning stages, or at least a indication that we could be starting that C wave, which also would probably be very, very choppy move up, very similar to kind of how it was back here, where we just had all this super choppy movement. It most likely won't be a very clean 1, 2, 3, 4, 5 wave move. It probably will be very similar to these, where it's just choppy movement up, and then we can finally reach price targets for that C wave. And if it is only a 3-wave move, and we add a resistance zone and we get that 1-2 setup to the downside, as long as we don't break above that third wave high and we get rejected from a resistance zone, well, it becomes more and more likely that either we could be going for a extended B wave, so maybe the B wave bottoms here at 63,000, but we get a 3-wave move, and then we get one more low, maybe around 61, 62,000. That will obviously remain a scenario, but it just adds more and more weight to the blue scenario, more and more 3-wave moves that we get within this range. So if we just get a 3-wave move, maybe we go lower again, but not below 60,000, 3-wave move, and we get rejection, well then there we go. We're more than likely in that blue scenario. So that's kind of what we're looking for price action. So those are kind of our levels. This is kind of what we're looking for. Right now we are kind of in the middle. So either from here we just get a extended 3-wave move up and we can possibly get a rejection, or we can get a break above this level. If we do start to head lower straight from here or after that 3-wave move, well, wait and see how price reacts to it. Is it a 3-wave move and a 1-2 setup to the downside? Or will it be a 5-wave move? Maybe it's a bit of a choppy move, and then we get a 3-wave move down, and then we can break above a swing high. And these swing highs here at 72,000, well, then that's going to be a pretty good sign that we could be in the very start of that C wave. So that's it for the analysis part of it. Now let's head over to the RSI. We have seen a very slight pump to 67. Did we break above this swing high? We did. Look at that. We broke above this swing high over here. So we could very well be in that extended A, B, C upwards. Remember, as long as we don't break above that 72,000 range. So that very well could be likely what we were in. Obviously, it's not guaranteed, but it's just something to look at and see how price reacts to it. So we're going to see from here how this price reacts to it. Maybe this could be all of a, I don't know, maybe a, well, let's see how it goes from here. Yeah, maybe go to the 15. Maybe this could be a B, 1, 2, 3, 4, 5. I don't know. It's still really early to tell on, but maybe all this could be an A, B, 1, 2, 3, 4, 5 wave move, all in an A wave, and then we get a B wave move down, and then a 1, 2, 3, 4, 5 wave move up in a C wave around that, somewhere within this range before we can get a rejection. That's just kind of where my thoughts are right now with it. Obviously not guaranteed, but that's very interesting to see. We did break above that swing high, so maybe we are indeed in this A wave. We get a B wave move down and then a C wave move up, and all this could have just been maybe a 1, 2, 3, 4, 5 wave move down and a third wave. Now we get a 4th wave bounce and a 5th wave move down. So that's just pretty something interesting. But if we look at the RSI, that's what I kind of wanted to look at. We had a bullish divergence forming on the 1 hour, which we see are now in effect with that bounce off. I think Trump said something about a possible deal or negotiations now in talk, and Iran's letting some oil ships go through. But I asked Grok AI, it's a AI thing on Twitter, and they said that's not exactly really the truth, and not all of it is oil. So that could be just more line from the president for maybe just to make the markets just go good. But you know, it worked out very good with the divergence. We also had a divergence here on the 4-hour chart, which we are now, seemed like we had that little push up. Obviously a day of divergence doesn't guarantee now we're going to get higher prices, but it's just kind of an indicator that selling pressure is indeed slowing down, and we could possibly have buyers step in, and that kind of seems like exactly what has happened there. On the daily, we are still within this neutral zone as well. On the 30-minute, we are getting close to that overbought territory, but not quite. We're still within the neutral, I guess you could say. And here's on the monthly, we have this lower trend line. I don't know if I've ever talked about it, but lower trend line on the monthly RSI. So if that plays out again, we could possibly bottom around that below 40 essentially. So still a bit more to go. So it kind of makes sense if we do get a few more lows. And I haven't really done any long-term, or I guess outlooks for 2026. That will probably be a video I should probably go over just to see where overall how many more lows. Not, I mean, obviously it's not guaranteed, but just to kind of talk about that stuff. And if we go over to oil as well, this is playing out very nicely as well. I don't know if you guys have been being updated on Twitter, but we were talking about a oil short. Played out very nicely. Donald Trump, thank you for the tweet, or I guess not tweet, but speech he gave on his plane. I think it's Air Force One or whatever he calls it. So that was nice. Thanks for the positive talk. So we were able to take a profit down here. But we just want to go over oil just because obviously it is a very important indicator within the market, and it very well could play very well with the Iran war and with Bitcoin as well. So that's just why I want to quickly go over it. My thesis for this, or I guess just the thesis we could really talk about, is we could have had a major top here just for this giant run right here. And now we could just be in a corrective A, B, let me redo that, sorry. What this would be if this is a major top, then if we had a 5-wave move down here, 3, 4, 5, that could be the first wave, and now all of this could be an A, B, C to the upside. And yeah, okay, I was thinking of this being a B wave, sorry about that. So yeah, all of this could just be a 5-wave move down, and then this could be an A, B, C, 1, 2, 3, 4, 5-wave move up, where all this could be a 1, 2 setup to the downside, and we could get a 3rd wave down. Now we are in the middle of a war. This very well could skyrocket up. I talked about this on Twitter, but I just wanted to kind of give my thoughts on that really quickly, where technical wise, maybe it's showing signs of, I mean, news can only get so worse before things just start to get better. So the war can only escalate so much. Prices can only go up so much. Inflation can only go up so much just before the articles can just get so bad before things start to get better. So it wouldn't really surprise me if we do get a rally. I wouldn't say rally. Obviously, it's not guaranteed, but it wouldn't surprise me to see if we retest some of these levels up here. And as long as we don't break above this swing high, it remains valid of a 1-2 setup to the downside, where we could possibly get that aggressive 3rd wave to the downside. But obviously, it's not guaranteed. That's just kind of my thoughts with it. We're in the middle of a war. We very well could just skyrocket to above this zone here. But like we were saying in the last video, I mean, when we hit so oversold, it wouldn't be surprising. Overbought. So yeah, if we go over to the liquidity, it's the main thing I want to talk about for why it wouldn't really, or why it wouldn't really make, or it would make sense if we do get a extend, or if we're in that 4th wave now, as long as we don't break above 72,000. Let's say we go to 70, 71,000, or if we go here to 71,000, that's almost $5 billion in shorts that would be liquidated if we get that corrective bounce, and I'm sure longs would pile in afterwards. And overall on the 30-day, that would again be close to that. Around the 30-day, it would be $3 to $4 billion in shorts that could be liquidated, which would obviously leave this zone up here between that same zone, that 72 to 74,000 range. As long as you don't break above that swing high, then we could possibly start to head lower. But that's definitely a major zone to look for if we do indeed get that extended corrective 4th wave bounce. This would definitely be in play. As long as we don't break above the swing high, then this could remain intact. Obviously, the higher we go up, people could start to close out their positions there. And here we go. Just want to go over the heat map, and we can wrap everything up. We have this zone below us for one more low for that B wave. It makes sense liquidity wise. And we also have this zone up here. This is the 72,000 range. This would be our invalidation point. That's that larger zone we were just talking about. But this could very well be in play, that 69 to 71,000 range. That could 100% be in play here. Otherwise, we could have just gone for this liquidity, and now we're going lower. So yeah, that's pretty much everything for this video. I wanted to, I know it went a little bit longer, but I wanted to try to just give my thoughts on everything and keep everything super simple. So hopefully that all made sense. Hopefully there's no major questions. Hopefully you get the levels, what we're looking for, this roadmaps and scenarios we could possibly be in, how oil can play in and affect it as well. But yeah, obviously nothing's guaranteed, but yeah, we just kind of have to let time do its thing. So thanks for watching, and we will see you next time.